Walk us through the basic findings and the magnitude that you are seeing.
So actually, Asia's growth rate this year will be 5.7%, and a slightly one tick decline to 5.6%. And we see this slight slowdown of overall developing Asian Pacific region growth is mainly driven by growth business cycle trend of a global economy. And part of this global trend is, of course, kind of stable but prolonged trade tension between U.S. and China.
Okay, that's it. But what sort of slowdown are we talking about? I mean, the thing is, we had the WTO talking about it as well. We have ultimately a situation where we are in stasis. Is it actually because of the trade war itself, or is it because people are delaying investment decisions as they await the outcome?
So overall, I think this global development, I mean, for the Asian Pacific region is concerned, global environment tilted slightly downwards. That's a sort of exogenous factors driving, you know.
Yeah, we went through some of them, didn't we? Yeah.
Yes, yes. But at the same time, I think uncertainty, you know, day by day, we see some positive news on trade tension and negative side. Day by day, there are some up and down. So I think that this uncertainty itself seems to generate a negative impact on delaying investment and also consumer sentiment. And this time, Asian Development Outlook, our report just released today, include a trade policy uncertainty index based on actually text mining method. News articles have a keyword like trade tension, risk, China, US. And then this text-based index showing that trade policy uncertainty seems to be a historical high now, right now. So this uncertainty itself seems to contribute to some delay in business investment, also slightly, tilted consumption sentiment towards the negative side.
Yeah. Yeah, so you've talked about, obviously, the US-China relationship and some of the other external factors like Brexit, but what about the actual factors that are happening within these countries themselves, and particularly when we look at exchange rate volatility and also natural disasters? How much of an impact does that play to downside risks?
So as to the exchange rate, last year, half of the year 2018, because of the U.S. Fed interest hike, we see some downward pressure, depreciation pressure of major Asian currency. But because now Fed started taking a more dovish position, so I think currencies are stabilized and rather appreciated. So I don't see this currency is really fueling downward trend. Natural disasters or disaster triggered by natural hazard, because a natural disaster is not created by nature, but also human exposure and vulnerability. So we call it disaster triggered by natural hazard. This is a medium-term issue, and according to the data, cross-country comparable data, Asian countries are really disproportionately exposed to disasters created by natural hazard. But again, this is not really, yeah, please.
I was just going to say, we saw on that chart of your forecast, but India is actually going to be picking up in 2020.
Yes.
What is driving that? Obviously, we know it's an election year. There's obviously been a lot of money given to farmers as well. Is that what's going to be behind that, or is it more sort of the oil price, the rupee?
Actually, India, I think this is a medium-term trend. India government engaged in a major economic reform in the last few years, including introduction of a goods and service tax. And I think these reforms really are pushing up overall economic growth, more than 7%, and this year 7.2%, next year 7.3%. And also, according to our data analysis, it's obvious domestic consumption play a key role in addition to domestic investment. So I think economic fundamentals seems to be moving towards the right direction. So that's underlying elements behind sound and picking up India's economic growth.
Yasuyuki, let's just talk a little bit about the nature of these developing economies as well. They are gradually becoming rich, at least in most part. Trade is very, very important in lifting people out of poverty and indeed creating that economic growth. But aren't these economies now becoming more domestically focused as well, with the service side of it, or tertiary it used to be called in the old days, of course, becoming more and more salient?
Yes, exactly. China is a typical country. In past couple of decades, really achieved the high growth. And for the country achieving a development, it's natural to going through structural transformation from more export-driven to more domestic demand-driven. And also industrial structure will shift from manufacturing sector-based to more service sector-based. So actually, China, we see clearly this trend. And this is the fundamental structural determinants why we see Chinese growth slightly moderating over time. And also this is the natural consequences of country really getting a middle income and also moving towards high income.